Okay, so welcome back to the second session of the accounts and leisure topic. So here we are treating the leisures and then the types of leisures. So to begin with, what is a leisure? What is a leisure? A leisure is a principal book of accounts that contains the accounts or records of the business. It is a principal book of accounts that contains the accounts or records of the business. Thus, it is the book in which accounts are kept. So, the accounts we studied earlier in the first part or in the first session, after we identify the accounts and then we look, we identify the various accounts in the transactions where we do the final recording or where we do keep those accounts is what we term as a ledger. So the ledger keeps all those accounts based on the type of account it is. It keeps all those accounts. So it is also sometimes referred to as the final resting place of the accounting record. So when when the various transactions goes through all the recording processes, the final place we keep them is what we term as the ledger. The final place we keep them is what we term as the ledger. So we want to look at the format of a ledger, how a ledger looks like, how a ledger account looks like. So the ledger account looks like a T account, just like what you are seeing. This is the table for a ledger. So when you are being asked to record a transaction in a ledger, this is the first point of call. You first of all draw the table, and this is how the table should look like. The table looks like a T. The table looks like a T. And we always say there are two sides of an account. We have the debit side, which is always the left side, and we have the credit side, which is always the right side. So let's look at the features of a ledger. The features of the ledger. So the first feature you see on a ledger is the account name. So the various accounts we identified in those transactions. Owner started business with check. You see, we identified capital and then we identified bank. So if it is the capital account you are creating, you write capital account here at where they've written title of account. You write capital account at the top here. If it is the bank account we are creating, then that one you write bank account at the same place. Are you getting it? If it is capital account at the top. If it's bank account at the top. If it is wages account at the top. Sales account at the top. GCB Limited or GCB Bank, whatever, at the top. Toshiba Limited at the top. You get it? So where the title of account is, that is where the name of the account is supposed to be written. That is where the name of the account is supposed to be written. Now this DR represents debit, the debit side, and then CR represents the credit side. That one it's not necessary for you to write it, but for us to see the format, that is why it has been introduced here for you to know that the left side is the debit and the right side is the credit, but not necessarily for you to write DR and CR on top. All that is needed on top of the line is the name of the account you've identified. The name of the account you've identified. So if you write on top here, capital account, it is only transactions that have capital nature that would come here. It is only when the owner introduces money into the business that you can record here because it says capital account. Are we getting it? Because it says capital account. If you write on top here bank account, it is only transactions that have check inside that you can record here under the bank account. If you write cash account, it is only transactions that have cash in it that you can record here as cash under the cash account. I hope we you get the whole scenario. So that is why we say when you pick the particular account, all the transactions relating to that account will be found within it. So all cash transactions are recorded on the cash account. All check transactions or bank transactions are recorded on the bank account. That is how the account looks like, and the account looks like in the ledger. So let's look at the second part of the features of the ledger. So always the transactions have a date that they took place. So always the date comes first. In accounting, we don't joke with the date, because if you forget to write a date, you will not be able to trace if truly that transaction occurred on the said date. And without the date, and you remove some of the transactions too, it will be difficult for us to identify if there are missing transactions or not. So always the dates are required. And everything you see at the left side, you see the exact same thing at the credit side. Everything you see at the left side, you see the exact same thing at the right side. Are you getting it? So we have the date, and then we have narration. Now here the narration always has to do with the corresponding account. The narration has to do with the corresponding account. So if I'm to pick an example where we said the owner started business with check. The owner started business with check. You see that one transaction, we identified two accounts inside. We identified the capital account and we identified the bank account. We identified the capital account and we identified the bank account. That is, owner started business with check. So those were the two accounts we identified within that transaction. Owner started business with check. So the owner starting the business is the capital, and then the check represent the bank account. So what this means is that if we write at the top here, capital account, under the narration part, we will write bank inside. So after the date, then you write bank. Okay, after the date, then you write bank. If you write here at the top or the title of the account to be bank account, then that means under the narration you write capital. Please, I hope you are getting it. So owner started business with check. Owner started business with check. The two accounts we are identifying is capital and then bank. So if we open the capital account, under narration we would write bank, so that when we pick the capital account, we say that, oh, it's true. So he introduced capital into the business. But what means or which type of capital did he introduce? The bank. So that is where you realize or you see the two parties that were involved in every transaction. So if the top here or the title of the account says bank account, then that means the corresponding will be the capital account based on the transaction I mentioned. Okay, so paid wages with cash. Paid wages with cash. So that one we identify two accounts, which is the wages account and then the cash account. So if we are to write the top here, wages account, then that means cash would be under the narration. Cash would be under the narration. If you write cash at the top here, that means wages will be under the narration. Wages will be under the narration. I hope this is very easy to understand. Yes, and then under the Ghana cedi sign, that is where you record the value of the transaction. Sometimes it can be dollars, sometimes it can be naira, whatever currency it is. So that is where you record the value of the transaction. I hope this is well understood. So note, narration is usually the corresponding account, just as I explained. So let's move on to the types of ledgers. The types of ledgers. And we have five different types of ledgers. We have just five different types of ledgers. The first type is the sales ledger. The first type is the sales ledger. Now, what does the sales ledger do? It records all of debtors in a firm. It keeps records of all the debtors in the firm. So the sales ledger only records accounts of those who are owing our business. Those who are owing our business. Sales ledger does not record sales account because sales accounts, those ones, they've given us the money. Those who came to purchase the items, they've given us the money. So because they've given us the money, we can't come and record them under sales ledger because sales ledger records only those who are owing us, all the debtors of the business. Someone comes to purchase an item from us, the person has not paid. The person is known as a debtor, and for that matter, their accounts will be recorded under sales ledger. But sales account does not come under sales ledger because the sales account, it only records transactions that have been paid already. So sales account, those ones they've paid already. So we can't record sales account under sales ledger. This I hope is clear. So we record only transactions of people owing us under sales ledger. Only people that are owing us are recorded under sales ledger. Now let's look at the next one, purchases ledger. Purchases ledger. It also records all transactions or all accounts of people that we are owing. So the business has gone to buy items from another business or another individual or another firm. And then when we purchase the item, we didn't pay for it. So because we didn't pay for it, we are owing them. So if we are owing them, then that means we are recording it under purchases ledger. We are recording under purchases ledger. And it is also called the creditors ledger. Purchases ledger is also called the creditors ledger. And then sales ledger is also called the debtors ledger. I hope you get it. So here too, because we are recording people that we owe, we do not record purchases account in here because the purchases account, those ones, the items we went to buy, we've paid for it. So we can't record purchases account in the purchases ledger. We only record people that we are owing, people that our business is owing, that we record under the purchases ledger. So our creditors. I hope you get it. And then the next one, private ledger. The private ledger. Just as the name sounds, private. That means this one is just not for external use. It is only reserved for the owner of the business. Mind you, the owner of the business is not part of the business. So all the time we make his own or her own account separate from that of the business. I get it. We make the owner, if it's a male or a female, we make their accounts separate from the business. So we create a private ledger for the owner. And those ones, it records transactions only relating to the owner. Transactions only relating to the owner. So you see, we have capital account. Capital account is when the owner introduces new money into the business. So that one is relating to only the owner, so it goes under private ledger. Drawings account is when the owner removes or comes for money from the business for his own personal use. And that one, because it is only relating to the owner, it is under private ledger. Please, I hope it is clear. Very good. So now the last but one, which is the fourth one, is cash book. The cash book. The cash book. The cash book, just as its name sounds, records all transactions that have cash or bank inside. All transactions that have cash or bank inside. So if you have a transaction which has cash, or if you have a transaction which has a check which represents the bank, it is recorded under the cash book. So cash book records both cash and bank transactions of the firm. Cash book records both cash and bank transactions of the firm. We have three types of cash book, but that one we will discuss it in when we are dealing with journals. We will discuss it when we are dealing with journals. But all what I want you to understand is that the cash book and the ledger records both cash and bank transactions. I hope it's clear. And then the last type of ledger is called the general ledger. The last type of ledger is called the general ledger. And this type of ledger records all transactions apart from the transactions that are recorded in the four above. All transactions other than the ones that are recorded in the top four is recorded within the general ledger. So sales ledger records those who are owing us. Purchases ledger record those we are owing. Private ledger records all things relating to the owner. Cash book records all bank and cash accounts. So meaning anything apart from all the four things mentioned here are going into the general ledger. So something like sales account will come here. Purchases account will come here. Uh, Land account will come here. A friend is what again? Um, oh, Motor vehicle account will come here. Stationary account will come here. Whatever account it is, stock account will come here. Whichever type of account again that we would have. Wages account, whatever thing that we would have, which is not recorded in any of the four at the top, is going to appear in the general ledger. I hope the types of ledgers are made very clear. So this is a trial question for you to answer. The first question says, what is a ledger? The second question says, sorry. The second question says, explain the following subdivisions of the ledger. The uses of the subdivisions of the ledger. So purchases ledger, what's the use of it? Purchase ledger, we just said it. Sales ledger, what is it used for? And then general ledger too, what is it used for? And then explain the main classes of accounts and their names. Explain the main classes of accounts and their names. So the accounts we studied in the first session, we explain the classes and then their subdivisions as well. So we have two main classes of accounts, and in the second type now we have another two subdivision. So they said explain what they are used for. So that is all for today. And yes, as usual, we've come to the end of the lesson. So have a great day and stay blessed. But don't forget, if you like the content of this video, kindly click on the like button, put all your questions under the comment section, and then also you can share. If you know of anybody that needs help, you can just share. And then don't forget to subscribe so that you don't miss any of our videos when we upload them. So see you in the next video. Bye bye for now.